Yo, what is going on, guys? Auto Stocks here. In this video, I have a lot of DD laid out for you, and I don't even know if I can wrap my own head around it. So if it sounds like a bunch of blibber blabber, hopefully you guys can put it together. Just bear with me here. This may be a long video because we do have a lot of information to go over. All I ask in return is if you guys could please hit that like button and hit that subscribe button. Let's get into the video. So the first thing I wanted to talk about is Citadel Advisors LLC purchasing AMC. Their shares are now at 670,000, and they did buy a hedged position. So the 15th, you can see August 15th right here, they bought puts for 3.2 million shares, calls for 6.5 million shares. But if you go back here, you'll actually see that the effective date of these trades is actually June 30th. So if you go over to the chart aspect, this is where June 30th is, and Citadel made their plays right before a big move in AMC, right before a big run-up, so it seemed like they expected it, right? It seemed like they expected the cycle to play out the way it was going to play out, and it did play out. So do we know if they're still in these positions now? It's kind of tough to tell, but I think some positions did get hedged for, and then they knew that something was going to come here, which is pretty weird, right? So they rode calls up, probably closed these out, dropped this down, sold off their puts, and they kind of just closed their position both ways. It could be that they closed their positions, but I wanted to point this out first, and the reason for that is because everybody is seeing 121% or 120% of AMC's free float owned by institutions. I saw this all over Twitter today. I saw this all over Reddit today. This guy said, I ran all the 13 Fs for AMC and came up with 309.22 million shares owned by institutions. So they own 60% of the free float, and retail owns 80 to 90% according to Adam Aaron. Now this is pretty interesting because Adam Aaron never gave us the exact facts on how he did get the share count, but he did say we owned 80 to 90%. So if we own 80 to 90% and institutions own 60%, there's already a big issue here. Now the next thing I wanted to touch on is Dave Lauer tweeted this, and don't worry guys, we'll get into the juicy stuff pretty soon. He said, seems like a good time to revisit the IMC enforcement case. I've seen two main reactions to this. One, none. The press appears uninterested. Industry wants to sweep it under the rug. And two, why was this fine so small? This is just the cost of doing business. I want to focus on number one. Okay, so the payment for order flow industry wants this case to be swept under the rug because it's a really big deal. This is essentially the SEC declaring that the OTC market making is not eligible for the locate exemption under the Reg SHO. They are not engaged in bona fide market making. Now this is extremely important, and he's going to explain why here. As a quick reminder, in January, I made a point along these lines. Citadel and Virtu are not market makers. They are high-speed speculators. What they do is not bona fide market making and should not be treated as such. The SEC is quite clear in this action. Bona fide market making is something that happens in a displayed venue where continuous quotes are communicated and represented in a way that makes them widely accessible to investors and other BDS. This SEC president makes that the OTC facilities run by Citadel and Virtu do not qualify for the locate exemption. They need to find locates, and they are not doing so today. This is the definition of naked short selling, selling shares they do not own and have not located. This also feeds into the concern of many retail investors that the pressure of retail buying is being funneled off exchange and not being allowed to impact displayed prices / orders. Abuse of this exemption would certainly degrade the price discovery process. Hard to imagine that these firms are not under active and intense investigation right now and in fighting tooth and nail against the SEC and maybe others on this critical issue. If the SEC is successful, the OTC biz could be ended. No more infinite liquidity from the fairies. Now this I wanted to touch on, and the reason I wanted to touch on this is because we've been talking about phase 6, and I wanted to touch on this real quick, and this is lending shares out. This is the lending market, and the reason I wanted to touch on this is because of how much of the free float, according to 13F filings, institutions actually own. So funds that engage in securities lending typically lend their portfolio securities to broker-dealers, which in return generally relend the securities to hedge funds and other market participants looking to implement various investment strategies. The securities loan is evidenced by a written agreement between the fund and the borrower, terminable by either party to protect the fund The risk of the borrower default. The borrower posts collateral with the fund, typically cash, but U.S. government securities and letters of credit are also possible. Now, if we go over here and we take a look at what is a letter of credit or credit letter is a letter from a bank guaranteeing that a buyer's payment to a seller will be received on time for the correct amount. In the event that the buyer is unable to make a payment on the purchase and the bank will be required to recover the full or remaining amount of the purchase, it may be offered as facility. The bank will be required to make the full or remaining amount of the purchase. Now, this is a problem, and this is where Phase 6 comes into play. Phase 6 is now into play, which is essentially going to avoid this, hopefully, or at least cost them a lot of money. This is the action where infinite liquidity, initial margin is going to be required, right? There's no more infinite liquidity. So besides the rehypothecation factor, which hopefully that will be knocked down by the SEC, the unlimited margin will be removed essentially, hopefully, by Phase 6. But if it's not, this is why lending securities is so extremely important, right? Lending securities can continuously be lent out, and they can do letters of credit, which the bank will promise to pay the full amount of the purchase if in the event that they can't make the payment, right? So I know this is getting confusing, and it's a lot to wrap your head around, and trust me, that's why I was telling you guys to bear with me on the video. The next thing I wanted to touch on is the short exempt definition. So this is used for listed security equities, a special trading situation where a short sale is allowed on a minus tick. The owners of convertible trading at parity can sell the equivalent amount of common stock on a minus tick, assuming they have the firm intention to convert. Now, this is pretty interesting, right? If you go over the actual short exempt article, it gives you listings as to why a short can be listed as short exempts, and that is if a security is convertible. And I wanted to touch on this, and the reason I wanted to touch on this is if you go over here to the short exempt volume or the short exempts on Stonko Tracker, you will see 2 million and 1 million, the two biggest days right here. The 22nd, August 22nd. You guys, does that ring a bell to you? That is when APE was issued on the NYSE, on the New York Stock Exchange. And then the day after. What happened when APE was listed on the New York Stock Exchange and the day after? This thing ran up and absolutely got obliterated and slaughtered to the downside right away the next day. Now, this is extremely interesting and extremely important to bring up. The reason for that is because this is not a convertible security, as Adam Aron stated and AMC as a company stated in general. So the fact that all of these short exempts popped up and people have not received their APE is something to definitely pay attention to. Now, I wanted to go over a few more things. This guy says of the 516 million shares AMC issued by AMC Theaters, retail owns 95.6, which amount to the 492 million shares. So of the 147 million shares reportedly owned by institutes, only 24 million are issued AMC. So the remaining 122 million held by institutes are fake and must have been issued to brokers. Now, this is interesting. You guys can see it right here. It says that on Webull, institutions own 4.81% of APE, and others own 95.6%, 95.19% of APE. Now, the numbers real quick on AMC. Shares on loan have gotten extremely high, 195 million compared to 192, I believe, a day or two ago. Cost to borrow average 18%. Free float, short interest, 21%. Now, a few things I wanted to knock down before we end the video, and it's this. I posted this tweet earlier. This is SEC, please take action. If you are corrupt, we will know by no action taken. We do know, prove us wrong. AMC stock is owned 85% by retail with 30% plus by institutions. Make that make sense. If you can, congrats. But AMC shares on loan exceed 195 million. And AMC also issues a preferred equity unit to existing shareholders on a one-to-one basis. Many have not received yet. Supply and demand in share price continues to make drastic moves. Fine. Failure to deliver has appeared as soon as they possibly could on APE. Isn't this a sign of naked shorting? The issue date of APE was 8/22/22. AMC has over 2 million short exempts on that day, 1 million plus the next. Regulation SHO is a regulation overseen by the SEC that is intended to prevent naked short selling and other abusive practices. Overall, guys, I think we touched on everything I wanted to touch on, but there is one thing left that I wanted to leave this video off. I wanted to leave this video off on a technical analysis standpoint, so I drew a few things out for you guys, and this is essentially what I got. I figured AMC can play out one of two ways, and I'm leaning towards one. Okay, so this fib channel that AMC is in, it seems as if the longer in the red zone, the bigger the pop, right? And every time it touches this blue zone, it gets smacked. Gets smacked, gets smacked, gets smacked. Over here, same thing back here, gets smacked, gets smacked, gets smacked. Longer time in the red zone, a bigger pop, right? You came all the way to the roof. Longer time in the red zone, a bigger pop. You almost got this breakout. And we're going to go over where I think AMC is going to go in a minute, but I wanted to touch on this real quick. So where I think algorithms broke, right? Because we talked about algorithms and how they can break due to volume intensity. I think algorithms broke right up here where this split happened, right? And the reason for that is because AMC broke out of this fib channel, right? It broke out of the blue line for good. It broke out this entire wick, so we had to create an entire new trend line. I think the algos broke here. What's interesting about this is essentially where AMC shareholders really hung onto the stock. You can tell by the OBV indicator. And then this new trend line that we have coming down here, this got touched once, twice, three times, four times before a breakout on AMC. We're now on the fifth touch, sixth touch, and I think AMC can go one of two ways. So I'm looking at this part right here. This one of two ways actually both line up at the same time, right? It's not about how they make it there, it's about when they make it there and in this time frame. So, sorry, my cat's meowing in the background. I don't know if you guys can hear him. But we're looking at this setup, and essentially this U right here, this pump, and then this sell-off until you get to here, which is a major turning point on the stock. This is where we thought it was going to break out, and it actually broke out to the downside instead, right? You saw the same thing happen here. It came down, and then you had to wait a little bit until a turning point. Both of these were 64 days long, and if this cycle does repeat, because you have the U here, this pump, this sell-off, if this does repeat in the same manner, you're looking around November 9th, November 10th for a next move. I think September and late October, early November are the 2 points where AMC can have major rip. So we're not looking at the shorter fundamental aspect of this, but I want to look at the longer time frame, the larger time frame. What this also will do is when this fib channel comes down, this is going to be another touch on the blue line. You guys can see it right here. It'll touch here before actually getting another breakout. So that's another interesting factor about it. But overall, guys, I really hope you've taken something out of this video. This took a while, and there's a lot of corruption and arbitrage in the background, and it pisses me off. Hopefully, Adam Aaron will work it out for us. Hopefully, we can make something work out. Make sure to get your 10 free stocks pinned in the comments, guys. You guys help me out. Download Moomoo, deposit $100 or more. It's a good app to trade on. Also, guys, make sure to smash the like and hit that subscribe button. Drop your tickers down below that you want me to say it's a buy or sell, and I'm going to make a YouTube short about it. Just have post notifications on so you can see your personalized YouTube short. It's all free. Put in the work for you guys, and I really do appreciate the love and the support that I get. So thank you guys. We are almost at 6K subs. I love you all. Lottery Stocks out.